Hello, everybody. This is Kyle Demian. Welcome back to another episode of the Wealth Building for Dummies podcast. I'm going to be your host, and I'm joined with Renji Matthew, our co-host for today, like most days, almost every day. Today, we're going to be talking about some different tax strategies and how you can save tens of thousands of dollars in taxes, not only this year, but every single year. We're going to talk about some of the tax strategies that we've had our wealthy and millionaire mentors share upon us so that we can implement into our lives, and we're going to relay those to you as well. So Renji, why don't you go ahead and get us started? Let's start talking about taxes. And actually, before we dive into taxes, we should probably dive into a disclaimer. Do you want to take that or should I do it?
Go ahead. I think you do it
Go
better.
ahead. Okay. Perfect. Well, we talk about, this is a Wealth Building for Dummies podcast, right? So we're just two dummies up here talking about tax strategies that we have been educated on and we can cite as well. We are not actual CPAs or accountants or tax preparers or tax planners, but we know and understand tax law, and that's what we're going to share with you today. This is meant to be educational and informative and to give you some ideas of ways that you can save on your taxes. Don't take our advice and just go and do it yourself. Actually seek out professional help. And now you have been warned and we can't be sued. So I think we're off the hook. Renji, go ahead and dive in and start talking about, let's talk about the U.S. tax code. And let's form a baseline of how taxes work and talk about the tax code for us.
So just to preface, there's about 6,700 pages in the actual tax code. But with all the rules, the IRS rules and regulations and all the changes that have happened, that tax code has become over 75,000 pages. And out of that, there's only under 50 pages that actually tells you how to pay taxes. Isn't that crazy? Out of the over 75,000 pages, under 50 pages talks about how to pay taxes. The rest of those pages talk about how to either not pay taxes or defer taxes so you don't pay until you retire or something later. So that's some of the stuff we want to talk about. And also, this podcast, it's mostly for business owners because there's not a lot of tax benefits for employees. And that's not to say you need to get into business for the tax savings. We're just informing you that there are a lot of tax benefits for business owners because the whole idea is it's to incentivize business owners because small businesses is what funds the economy, right? So it's all about bringing tax benefits to small business owners. So we'll start with that. Go ahead, Kyle.
Yeah, I love it. That's a good baseline for us because as an employee, you really only have so many deductions. You can deduct the mortgage interest if you have a mortgage. You can deduct having children. You can deduct your contributions to specific retirement accounts. And then I believe the only other thing you can really deduct is charitable contributions or gifts. So as an employee, you're already limited. And what that means is that you're subject to more taxes. But yes, like Renji mentioned, the tax code was written for entrepreneurs and business owners to help incentivize them to go out and stabilize and improve the US economy, right? So as business owners, you get opened up to so many more deductions and other opportunities. And to do that, to be able to start to actually take advantage of some of these deductions, you need to have a 1099 or at least an LLC. One of those two designations will allow you to start deducting other expenses to lower your taxable income. One thing I think we should talk about right now and get it out of the way, just to kind of lay a baseline before we start talking about actual ways of saving money. People tend to believe that deducting things means that they are free, right? Tax deduction does not equal free. We're going to say that right now. But Renji, can you take us through like what a tax deduction is and kind of how it works instead of people thinking that, hey, tax deduction means that it's free?
So I can show an example, I guess. So let's say you're a business owner, and let's say you own a car wash, right? And I'll just keep math simple. So let's say in a year you made 100,000 in income. Uh, but let's say you have one employee who you paid uh, 50,000. Again, these are just simple math, so bear with me here. But yeah, so that means income-wise, what came into your pocket was 100,000, but your expenses, again, you as a car wash, you'll have not just that employee, but equipment, all that stuff you have to pay for. But let's just say keep it math simple, you paid that employee 50,000. Now, as a business owner, that 50,000 you paid the employee is an expense. It's a business expense that you could write off. So now, in the eyes of the IRS, there's only the leftover 50,000 that they can tax you on. So tax there's business expenses that you can write off, and let's say you buy, and going more to with that example, let's say you spend in that year about 5,000 in all your equipment and 5,000 in your utilities and all that stuff for that business. That's another 10,000 you can write off. So again, in the eyes of the IRS, there's only 40,000 in income that they can tax you on. Hopefully that made sense. You want to add anything to
Absolutely.
that, Kyle?
No, I think that was a good description that, yeah, tax deduction means you deduct from your income and then you have those savings from there as well. Business owners are always looking for different tax deductions, but that's for, obviously a tax deduction is something that should improve your business revenue in some way. So you're not only increasing your revenue, but you're also potentially lowering your taxes. So that's why tax deductions are so important to business owners, right? From there, starting an LLC and or having a business allows you to start to have more write-offs, like we mentioned, right? You can already have the same write-offs that you had previously if you were just an employee, but some of the additional benefits and write-offs that you can have once you're a business owner is actually the ability to start to write off some of the personal things that you already have and you already use on a day-to-day basis. What are some of those examples? Your cell phone. If you use your cell phone to run your business, you can now start writing off your cell phone bill. If you have a vehicle, you need to drive around for your business. Now you can write off either your miles or the cost of gas. If you have a home office, Renji, you're recording this out of your home office. I'm in my home office. You can take the square footage of your office and you can deduct that. It's a portion of your rent, it's a portion of your mortgage. That portion is now a tax deductible expense if you are a business owner. These are just three of the short, quick, and easy ways that now, as you as a business owner, can start to write off some of your personal expenses that you were already paying for. Those three things were no change in your budget or your monthly expenses because we all already have them, right? And the fourth thing with it, I'm actually kind of wearing it. If you can see, if you have a business, you have an LLC, buy clothing. You can buy clothing, whether it's Nike, Lululemon. If you throw your logo on it, now that's become a tax deduction for you. And you should be promoting your business. You should be promoting your company or your personal brand. And that's what I do. That's what Renji does. And that's just some of the just basic common deductions that you can start to have as you are a business owner. Renji, I'm going to turn it over to you. Are there any others that I'm missing or that you can think of or that we should go over here?
I think simple things, that's it. And adding on to what you said, I guess you could say if you're working, like me and Kyle, we do everything from our house. So because we do most everything from our house, we could also write off our internet bill. And when I say, when we talk about writing off, it's not all of it, not all the mortgage, not all the phone, it's percentages of it. And yeah, so we could write off our percentage of our internet bill, utilities, whatever it is that you pay for originally, especially if you do everything from home, you can pretty much write off a percentage of all of that. Especially if you need it to do the business, like I need my electricity, my internet, all that to do my business. So all of those are business expenses that we can write off. And also, let's say this camera that I'm using, this computer that I'm using, I use it only for business. So those are all business expenses that as a business owner, I could write off. Yeah, I think that's all I would add.
Perfect. Another one, and I'm sure there's some people watching this that have kids. Renji, can you talk about the ability for us to hire our kids inside of our business, and then we can also use that as a tax deduction, and then talk about that first part, and then talk about probably the greatest part about doing it is, how the children receive that income. How does that work?
Yeah, it's pretty cool. So I have a son, and we've talked about we're not doing this because we need to. So our son, we have used him in some of our videos in the past and stuff like that. So if we wanted to, we can hire him into our business as a model because he could be on our videos, on our pictures, all that stuff, and he could be a model for the business. And as an employee of the business, I can pay him, and because he's a minor, and this year the numbers have changed every year because of inflation and everything. The numbers change, but you could pay him. I could pay him as a business owner up to a little over 13,000. It's like 13,850 or something like that. Let's just keep math simple. Let's say 13,000. I could pay him up to 13,000 as an employee, and for me as a business owner, again, like we talked about with the car wash example, that's a write-off for me as a business owner. But for him, being a minor, he doesn't have to pay taxes on up to that amount. Um, so for him, like we're both saving on taxes if you think about it that way. Because me as a employee or a business owner, it's a write-off. For him as a minor, that's he doesn't have to pay tax on that. Now think about it this way: what if I had a bank account set up for him, which we have this set up? So let's say we had a bank account set up for my son, and we put all of that income into that bank account. Direct deposit goes to that account. Now we take money out of that account for any of his expenses. Again, you're saving money on taxes there again because it's money you paid him as an employee. Now you take that money, go buy stuff for him, any food you get for him, any if you have a baby that you use for as an employee for the business. Let's say you've got milk, diapers, whatever it is, any expense that you have to uh, pay for that kid, you could take out of their income you're paying, and again, that's a write-off. I mean, you didn't pay tax on it because it was a write-off for you, and he doesn't have to pay tax on it because he's a minor. Again, I'm gonna specify whatever job you allot them. It can't be like uh, you controlling heavy machinery or something like that. It has to be something that only a minor can do. I know of business owners
Hmm.
that use their minors to put stamps on their envelopes or put mail in the mailbox, stuff like that. It could be anything simple, but you got to look up the wages of what that person would get paid for that. Look at the high and the low end and see, hey, what makes sense for you in the area you're in and stuff like that, right? What would a model get paid? So yeah, so for a kid, that's a lot of money that not only you're saving as a business owner, but they're saving on taxes. And now we could go so many ways with this, but imagine taking that and putting it into a tax-free account for them at a young age. So many things we could do with that. Before I keep going on into the deep end, Kyle, go ahead. Is there anything you want to add to that?
Well, no, I like it. And I think people that are hearing this or listening to this, especially if it's the first time that they have ever heard it, they're probably thinking, wow, well, that's nice, but I don't have an extra $13,000 a year that I could just pay my child, right? But what you can do is you are already spending over $13,000 a year to raise your child, right? Think of some of the expenses that you already have, whether it's food, clothing, daycare, which I've heard daycare now is about 1,500 to maybe 2,000, $2,500 a month. Right there, that's already more than $13,000 a year, right? But just food, clothing, especially if they're a little bit older and maybe they're in sports, there's costs to that, education. Like there are costs to having a child that probably easily equate to over $1,000 a month, which is close to what the $13,000 a year breaks down to, right? So what you can do, instead of paying for all of the expenses for your kids out of your personal bank account as the parent, right? You would first hire your kids in your business, have them do the work, You pay them from the business. The child receives that money tax free. It goes into their own bank account. But because they're a minor, who still controls that bank account? The adult, the parent, you, right? So you as the adult would just pay for all of their expenses that you're already paying from their bank account rather than from yours. And what would the savings be for doing something like that over the course of time? Well, let's use round numbers because I agree with you, Renji. Let's keep everything simple, right? And let's say that you paid your child $12,000. That's a tax deduction to you. They inherit it tax free. Let's just say you're in a 25% tax bracket. Once again, to keep the numbers simple, what is a 25% tax savings on $12,000? That would be $3,000 a year of tax savings, right? Yeah, 3,000 is 25% of 12,000. So you're saving $3,000 in taxes that otherwise would have went to the IRS and your family would not have seen. That's only just with one kid. If you have two, three kids, obviously you can see how this can scale, but just with one kid, that's going to save you $3,000 a year, right? Say if you have two little ones running around, that's $6,000 a year. And that's not even talking about the home office and the phone bill and the internet and your car and everything else that we can write off and start to deduct and have additional tax savings for. So, Renji, was there anything else that you wanted to talk about in regards to how you can write off your children?
No, I think we've gone it deep enough on that. But like, I'm excited to keep talking about all the different things we can talk about. So let's go on to the next one.
Absolutely. The next one that we should talk about would be traveling. And if you have a business, you can actually deduct and write off your travel. Renji, do you want to talk about like what are the, basic steps to do that and then go in depth if you want?
Yeah. So uh, y the biggest thing is have documentation for everything. So let's say you work with other people or you have an employee or something, and you guys decide to go on a business trip or whatever it is. As long as you have email or proof or documentation showing that you guys decided to have a meeting there, you can of course, again, like Kyle said, don't take our word for it. Talk to your CPA, look up the rules, and we'll talk about some of the IRS codes in the end of the episode. But yeah, so look up what all rules you have to do and exactly what you have to do. But if you have documentation and proof showing, hey, we're meeting at this time for a meeting to talk about business expansion, business strategy, whatever it is, that business trip could be a write-off. Again, talk to your CPA to see what all you could write off. But technically, you can write off all of it because it's a trip for the business. Um, you want anything to add to that, Kyle?
The only thing I want to add is like anytime we're talking about tax deductions too and how to write it off, number one, I'll always try to keep in mind that documentation is going to be everything. And what should you document? Receipts is the easiest one, but also like think of it like this: who, what, where, when, why, and how. Maybe who did you meet? Where did you go? When did it happen? What did you talk about? How long did it last? Like those are what did it cost? Those are some of the different things that you want to keep and document. Usually that's all within a receipt. And for me, and Renji, you may or may not be the same way. My CPA has instructed me to write on the top of the receipt who I met with, what we talked about, what we did, how is it business related, and how is it going to expand my business, right? Like that's basically what I sum up, and that's how I keep track of it. If you're going on a vacation, you need to document the travel, why it's business related. Are you having business meetings or is it for some type of business function or maybe a convention? But there has to be some business purpose in there. And actually, if you sandwich it between the weekend and the weekday, this would be something I don't have the notes in front of me, but I would need to look it up. But the government doesn't count the weekend as business days. So if you were to sandwich two meetings on Friday and Monday, I believe you could still write off the trip and you have Saturday and Sunday to do as you please. Renji, I'm not 100% sure on that, but I believe that's right, right?
Yep, exactly. That is. Yeah, and like Kyle said, as long as you save the receipts and all that stuff, and we kind of do the same thing right on there why you met, and that's another thing we forgot to mention before. Meals. If you went out to have dinner or with a client or something like that, that's a write-off too. Not all of it, but during COVID, government had made it where it was 100% write-off because restaurants weren't opening, wasn't getting enough business. But now they've gotten back to 50% of it, which again, more ways to save money on your taxes is what we're trying to say. Um, do you want to go on to the next one, Kyle?
Yeah, I'll go on to the next one. And one other thing I want to talk about really quickly, because we didn't, is that the IRS. Do you have the IRS definition for tax deduction handy? Um,
No, I don't think so. Oh, I think so. Yeah,
I don't
uh,
either of
it's the It's the
you do.
legal right of taxpayers to decrease the amount of what otherwise would be his taxes or to altogether avoid them by means which the law permits cannot be doubted.
And it has to be ordinary and necessary.
Ordinary and necessary. Yep.
Ordinary and necessary for you to grow and build your business and scale it is what
Mhm.
the government wants to look for, right? And once again, like we've talked about before, this is what you hire CPAs and tax planners for. But not all. This will be something else we have to cover. Not all CPAs and accountants are actually active tax planners. Some of them are more just like tax filers. They help you fill out the forms and they tell you, hey, this is what you owe. They're not all going to go out of their way to actively help you seek tax savings. This is where you need to have this education and knowledge, because there's not going to be one person that has your interests at the top of their mind as much as you will. Not all CPAs, not all accountants are going to go out of their way to help you think of some of these different ways to help you reduce your taxable income, right? But this is why you, as an individual and a business owner, need to learn and understand these things and at least have it in the back of your mind. You don't need to have it all figured out. Bring it up to your CPA and the person that's helping you and have them help you actually deduct it and save this money, right? And with that, Renji, continue on. Was there something else that we were going to cover that you wanted to talk about too?
Yeah, and to add on to what Kyle said too, with the CPAs not all doing the same thing, the way I like to explain to someone, it's kind of like a doctor, right? When they go through medical school, when they're done with school, they're general doctors. Now they have to go and specialize if they want to specialize in something or be an expert in one specific area. It's similar to CPAs. When they get done with CPA school or whatever it's called. They are general, they're kind of more of bookkeepers, right? They know how to do simple taxes and stuff like that. But to be an expert in tax savings, especially for business, they have to go and look at that and research those things. So we like to recommend to work with CPAs that are business owners themselves, because if they are business owners themselves, or if they're trying to do something similar to what you're trying to do, like in our case, passive income, they will, they hopefully have gone and looked at all the research into how to save money for themselves. And if they have, then they'll know how to do the same exact thing for you, right? Because a lot of what I've heard, and I've said this before, I'm on my seventh CPA, not because they were all bad. The first four I had were just more so bookkeepers than tax strategists. The last couple I've had, they've been great. And one thing I've done, I keep referring business to them. They get so busy, so I'll get another one. But not that the last three were bad. It's just they get busy, especially if they know what they're doing and they're saving you a lot of money. Yes, these CPAs that are experts might cost more than a regular CPA does, but if they know what they're doing, you will be getting so much more money back and keeping more of your money than what you otherwise would. Um, I think, unless you have something to add to that, Kyle, I think the next thing we were going to talk about was the Augusta rule. Was there anything you wanted to add to that?
There was not. No, let's go ahead and let's talk about that. What is the Augusta rule and how does that work for us, Renji?
Yeah, so Augusta rule, what it is you can pretty much, especially for me and Kyle, since we work from home, we can essentially rent out our home to our business, and that's a write-off for us too. So, and it's only 14 days. Again, the rules can vary depending on state, but what you want to do is you want to look at what an Airbnb would go for in your area, the for where your house is. You want to look at the high end and the low end of that, and you want to kind of, it's your judgment, but you want to kind of pick what makes sense into your house. But you can rent your house to your business for 14 days out of the year, and that's a write-off for your business. Um, so that's again more tax saving strategies. You want to add anything to that, Kyle?
Yeah, the only thing I wanted to add to that, which I think you just covered it at the end, like the idea behind it is, yeah, you can have your business essentially rent the house from you and use it for a board meeting or some type of large meeting to bring your shareholders in, your employees, have a get together, a meeting. Like those are the different ways you can do it. Or even I think it doesn't have to be limited to just your employees either, but you could also just rent out your house to other people, right? Put it on Airbnb. Use Airbnb to figure out, what the price range would be. Look at the lowest price range for houses in your area that have the same, similar square footage, same amounts of bedrooms and bathrooms. Look at the minimum range all the way up to the maximum range and find something on the minimum to, right in the middle. You don't need to be the highest priced one. That's going to look a little fraudulent in the IRS's eyes, right? But aim anywhere from the minimum to middle. And then you can rent out your house for less than 14 days a year. And do you get that income tax free or is it just a tax deduction? Or is it both?
It's kind of both. So this is another passive income option, Airbnbs, and that's exactly what you could do. And so that could be a tax. That's an income if you have an Airbnb business, but it's a tax deduction for your business because you're renting the business to yourself. I mean, the house to your
Yeah,
business yourself.
yeah, I just looked it up. It's section 280 AG. And this section of the tax code allows homeowners in any income bracket to exclude up to 14 days of rental income from their taxable income. So it
Yep.
is tax free. It's not a tax deduction. It's
Right
just
off.
tax free income that you receive as an individual. Yep.
Yep.
Yep. And your company could write it off. I guess that's what it is. Yeah.
Yep.
Perfect. So that's the Augusta rule. And then, Renji, I've got one other thing I want to round us up for today, but it's not another tax deduction. Did you have
Okay.
anything else in mind that you wanted to cover today? Because I think we've gone for about 28 minutes. We've given people
Yeah.
tens of thousands of dollars of tax-free game for the last 28 minutes. Is there anything else we can help these
Yeah.
everybody
So
with?
guys, these are just a few. Like, talk to your CPA. There's so many more other things out there. But one other thing I would like to say, if you're always looking to better yourself, to get your business further, or you find a mentor, or you do some kind of classes to get your business better than what it is before, those are all expenses because again you're let's say you're in a coding business or whatever. If you went and took a course to learn how to code, that's a business expense. And let's say you have employees that are essential for your business and you send them to go take a course or a seminar or something like that to help them get better at what the job that you've given them. Those are all business expenses. There's also actually we haven't talked about this on this episode, but health insurance. Like if you hired your spouse into the business and they need a health insurance, right? And it could be a employee benefit that you are paying for you're reimbursing them for the benefit, the insurance costs or whatever. Again, these are all tax codes that are out there for your benefit to be able to save more of your money on your income, like save more of your money from taxes. And these are just a few, guys. Like Kyle said, we've already given you so many ideas to save thousands of dollars a year on your taxes that you can put toward other stuff. Imagine just even $1,000 extra that you get to keep. That could go a long way, right? $1,000 a month could do a lot for your family. But yeah, I think that's a good way to end about, because there's so many things. If we kept talking about it, we could go for hours. So go ahead, Kyle.
Yeah, absolutely. And just to wrap us up, I think the last thing we'll say is that as an employee, I think we've all been an employee at some point in our lives, and we all know that when we get paid by our employer, who is it that jumps in and takes their cut first? It's Uncle Sam. The government takes their taxes before you even see the money when you are an employee. As soon as you become a business owner, though, that doesn't happen. You get paid directly by your clients, and then as a business owner, you have the option to deduct your income before the government ever takes their cut. That is the biggest difference between being an employee versus being an entrepreneur when it comes to taxes, is that the government doesn't automatically come in and take from you what is theirs. You get the opportunity to spend it on your business first, and then whatever is left over, that's when you're taxed, which is the biggest difference between being an employee and versus being an entrepreneur or a business owner, and why you can save so much on your taxes. And remember, this isn't tax evasion. It's not tax fraud. We're doing everything that is legally and ethically and morally available to us as business owners for us to grow and scale our business. Why does the IRS want to incentivize us? When we have a bunch of small business owners thriving and being successful, that's what keeps the US economy thriving and successful. And that's exactly why so many pages out of the tax code are actually written for entrepreneurs. There is nothing that's really written for employees because there's just nothing that they can deduct or write off because they don't have a business with expenses to be able to deduct and write off. Right. So with that, hopefully this was helpful. Drop your comments below. Let us know what other, questions you may have. Maybe we'll do ongoing episodes because taxes are always ongoing, right? And maybe we'll dive into each one of these strategies, pull it up, show you the IRS tax citations. Renji, I think when we're talking about the different areas, I'll put the IRS tax citations there for people so that they can track them. And other than that, we'll see you guys on the next show. Be sure to like and subscribe. That helps our podcast, gets our podcast and our show out to other people so we can bring on better guests. And we will have our first guest coming on this week. And we're excited to show you guys how to build wealth, how to do it tax efficiently and or tax free. And until next time, we'll see you guys later. Take care.